The harsh realities that no one likes to hear, and the journeys that no one likes to see. Bringing you these journeys with the Insane Minds podcast. Here's your host, Sarvesh Maria.
Welcome. You all folks gonna find this episode very interesting because today, which was November 2nd, 2022, I had pleasure to speak with Pete Benson, who's a financial advisor and the owner and the partner of Beacon Capital Management, having $1 billion of assets under management. Today, me and Pete talk a lot about the finance industry, and he also brings up a lot of good topics about managing risk and how to plan your wealth. But this episode ended up being more longer than I ever thought. So, I divided it into two parts, and the second part will release next week. So, stay tuned for that. Alright, let's not waste a lot of time. Get comfortable to listen to Pete Benson. Hello, Mr. Benson. First of all, thank you so much for coming on the show. It's my honor to speak with you today. But let's just jump into it and please go ahead and tell us a little bit about yourself and your background.
Born in eastern Canada on Grand Manan Island that sits off the coast of New Brunswick and Nova Scotia, which are provinces there. Grew up there, son of a commercial lobster fisherman, grew up in a Christian home, had a great family, great background. Married my high school sweetheart, Ginny, who actually grew up 7 houses away from me. So we've known each other forever, essentially, and went to school at Kingswood University in Canada, then Eastern Nazarene College in Boston, and from there moved south here in 1989, and shortly thereafter got into the financial planning and wealth management business, and have done that for 25 to 30 years.
Love it. But please go ahead and tell us a little bit about your firm and your company as well.
Yeah. So Beacon Capital Management is the name of my company. I actually worked for 3 to 4 years in the late 90s for another firm here in the Brentwood, Tennessee area. And it was called Estate and Financial Services. So that was a good training and beginning for me. But I came from a family of entrepreneurs, and my dad was, my grandfather, my uncles, almost everybody owned their own business. And so in the back of my mind was that if I learned this business well enough, I would love the chance to start my own business. So in the year 2000, I took that step. My wife had a really good job. She was climbing the business ladder, had an executive position with Bell South, making good money. And so we could more than meet the family budget with her money. So I took the risk to start my own business, really with no seed money, never borrowed any money, never had anyone give me 20 or 50 or $100,000 to start the business. I just carved it out one client at a time, essentially working out of the trunk of my car, and eventually rented our first little office, which was just one office, maybe 12 by 14, and then started building from there. So that's how it started, and we're really blessed today. God has just done 100 times more than I asked or imagined. I love this business. It's a helping business. So I got into the business just to help people. Never really did it to build a great business or make tons of money or anything like that. Just I love helping people, and this was an area that I loved, and I thought I could help. And as it is today, we have 4 locations in middle Nashville, Tennessee area, 32 or 33 staff members, maybe 10 financial advisors, and we manage about $1 billion of clients' money that's been entrusted to us, and we take that very, very seriously. That's a big responsibility.
Yeah, for sure. But the money is the good part of it, yeah, and you have seen immense amount of growth, but I believe it's because the clients actually trusted you. You know, as you mentioned that you never thought of having such a big business or making a lot of money, but what your main motivation was to help people. I think that's what brought you so far ahead. But now what I'm really curious about is that you mentioned earlier that you started your business from your car, but did you had any kind of proven data or just statistics of your performance, the way you managed money?
No, that's an excellent question. I didn't, and in the first really 3 to 4 years, this is a people business, and they were buying into me, and thankfully God gave me some skills, and I just seek to live a life of integrity and high character, and work hard for people, and it was just my word that, hey, I've got your back. I'm gonna work hard for you. I really feel like I have a good plan. Uh, but look around you. I don't have a fancy office, all kinds of people, all kinds of technology. Uh, if you say yes and want me to help you with your finances, essentially it's me. And it's amazing. We think sometimes that all the shiny things and big offices and fancy stuff is what's going to appeal to people. But what they want is they want somebody that is real, somebody they can believe in, someone that they share values, that they can look them in the eye and just tell that, what, they mean what they say, and I'm going to give them a chance. And that's, in the early years, that's all we had. And really, even today, that's the main thing we have, because if our word isn't good, we don't do what we say we're going to do, and we don't prove to be honest and people of integrity, then fancy buildings and great technology and all this kind of stuff is totally meaningless. And in this type of business, there tends to get, unfortunately, some scallywags, I call them, that goats in sheep's clothing, that maybe they meant well at one time, but they go astray, and all of a sudden, they become a Bernie Madoff, and take people's money and whatever. So I think more than anything, more than the outer layer of kind of signs of success, what they want to know is that you're going to do what you say you're going to do. I take that all the way back to my youth, and my grandfather, my uncles, my dad. I mean, those were things that they just burned into my brain, that when you shake somebody's hand, you look them in the eye, you tell them you're going to do something, you do exactly that, and you prove to them that you can be trusted, and one person at a time, and then they share with somebody else, and that's really how our business is built.
So were your first few years ended up being positive?
They were. I told my wife, though, when I got enough courage to ask her back when I started the business, that I was like, okay, you're making more money than me to begin with, but I'm starting to make a little bit with this other company. At least I'm making some money. I said, but how about if I was a kept man for a couple of years? How would you feel about that? Because, I really have this dream to start my company. It's a big risk, I know, but we can make ends meet with your money. But I may not bring in a whole lot of money in the first year or two. And so essentially, I would say the first couple of years, I did actually make a positive contribution to the family because I wouldn't spend more than, you know, only a very little bit of money. I tried to do it on a shoestring budget and and not have any unnecessary expenses in order to help people. I had a car, I had files, I had paper maps. I would drive to people's home until I had an office that they could actually come to. And there's people that really appreciated that. And I didn't have an office to show them. I told them, if you're wondering what Beacon is, you're looking at him. And so we probably didn't make a whole lot of money, maybe $10,000 or $15,000 a year for the first couple of years, but at least I didn't go in the hole and I didn't have a big debt. I've never borrowed money except eventually in the first office was in 2006. I bought my first office. That's been paid off, but I did go into debt for that real estate and paid it off early and quickly, but I've never borrowed money to with equipment or to hire people or for marketing or any of those things. It's just like pay as you go. And it may be slow, but at least I'm not going behind. But yes, I did make a little bit of a profit in those first 2 or 3 years, enough to know that, you know what, I think I can do this.
So, what year was that when you started?
The year 2000 when I started on my own.
So, we all know that 2000 was when .com bubble burst, and you still ended up having positive years. That's very impressive to me.
Yeah, and just to kind of let you know, at the time, and I didn't know that was going to happen. 2001 and really part of '02 was horrible. Tech stock bust. Here's why it was good for me. I hadn't already been managing people's money, and what a big downturn in the market does is it shocks people into reality, and it helps them to really understand that where they thought they had this most perfect position and financial situation, it was at risk. And during volatile, tough, down years in the market, it actually tends to be, if you're a growing company, some of your best years for taking on new clients. Because think of it this way: if everything's going up for 1 or 2 or 3 or 4 or 5 years in a row and everybody's making money, they may not have the best investments actually in their portfolio that they should have, but the market is making it look better than it is because it just keeps going up. So they're like, well, I don't know what I got to worry about. Everything's just, I keep making money. And then all of a sudden, when the market goes down, they realize that, good investing is not just how much you make in the good years, it's how much you don't lose in the bad years. And how are you going to structure things so that if the market goes down, you don't get gutted? You may lose, but everybody doesn't lose equally, depending on how their money is managed, how broadly it's diversified, and that kind of thing. So actually, that made more people kind of take a look around to see if somebody else had any other answers. So you can see that actually worked in some ways to my advantage, because more people consider talking to another advisor as a second opinion when things aren't going perfectly well for them.
It does make sense for sure. But, that time was 99, was the time when everything was going up. Now, weren't you like that I can personally go to these mom and pop shops where trading was becoming so easier? There were online things coming up, and weren't you like that I can go trade on my own now? Why do I have to make money for other people?
Yeah, I never really, it wasn't appealing to me to just be a day trader or to try to um, manage my own money to make a whole lot of money. I really had a desire to help other people, um, and so sometimes it's kind of like the shoemaker's children have no shoes. You're helping everybody else, and one of the things I have to keep reminding myself of is to make sure I keep up with my own investments and financial situation, which I have, but there's been periods where you just get so busy helping everybody else that your stuff gets kind of shoved to the side. But this kind of business, if you really are going to excel in it, you have to love people, and I do. You got to care for people. My master's degree is actually in counseling, and I think I'm drawn to just counsel people about their money. And um, I tell all my advisors now that, good education, CFP, financial education is great. But this business is like 20% managing people's money and 80% managing their emotions, especially in a year like this. You got to hold their hand and make sure they don't jump off the cliff, and make sure they don't do something they're going to later regret. So a lot of it is managing their emotions, and I kind of enjoy that. It can take its toll, but that's really what I like about the business is I get to give people answers to give them peace of mind and direction.
So, what were the early challenges that you had to go through?
Yeah, well, I mean, partly what you mentioned, it certainly did become an issue when I had really no seed money or investors to kind of help me start the business. I'd never started a financial business before, so in hindsight, um, you know, um, I wish that maybe before I jumped into it, that I would have taken some classes, more classes on business management, marketing, those kind of things. I had done some study and research and had a pretty good background, but what I realized is that there was a lot I still didn't know. Um, so that was one thing. And then about 3 years in is when I met John Maxon, who has been my business partner ever since. And the other thing I realized is that doing it by yourself, it's lonely. And it's a lot easier if you even just have one other person or two or three people that you're doing it with. Because when I'm having a bad day, he can pick me up, and, in those early days, and then vice versa. Um, there were a lot of opportunities to go to conferences to learn. And, in hindsight, I wished I had have said yes to more of those than I did. It's kind of like the guy chopping down the trees. He hasn't got time to sharpen his axe, so he just keeps hitting it harder. And I know that in those early years, I was just hitting it harder and not smarter. And so um, I've always been a student, but there were times that I worked so long and hard to try to make it work that I think I could have escaped some of the mistakes and problems, um, valleys, if I had have taken some time to just learn what I needed to know, because I didn't know what I didn't know. And what I know now is that marketing drives everything. It really does. Like now I would tell people we're a marketing business that just happens to market financial solutions. Almost every business is a marketing position or company because it really does. It drives everything. There's so many people in my business that are very smart and they're very honest and they have good answers. They have good solutions. Like if you put a client in front of them, they're going to do an awesome job. But they're sitting in their office looking at an empty chair, starving to death because they don't know how to attract clients to their business. And I think when ours turned a corner in a big way was after we were in business 5 or 6 or 7 years, maybe in 2006 or 7. We really got exposed to some companies and people that could really come alongside us and help us learn how to attract people, what methods were out there to bring people in so that we had a steady stream of people to see. Because the more people you see, the more opportunity, if you have a good answer, the more you get to help. You only have a few people to see, you're only going to help a few people. And we learned that was the key. And we got really good at it. And now we have a marketing team, 3 or 4 people plus 2 or 3 of the rest of us. So we've really learned how to market. That has turned our company, the growth curve has just gone crazy.
Wow, that's so nice of you that you mentioned that you basically a marketing firm, marketing financial solutions. Because I don't think I've ever heard a company executive or a CEO in general that they're marketing firm but just marketing different kinds of products. But you started your company back in 2000s, coming into crash, and then when you were seeing some level of success, you ran into 2007 and 8 crash. How did you deal with that?
I know every time we get momentum, the stock market has to crash. I'll tell you that was even way worse than 2001 and 02. I don't even think a lot of people know how bad it got there. I mean, when you've got major companies, AIG, Lehman Brothers, Bear Stearns, some of these major companies going out of business. And then our country's debt literally got like put down, downgraded. That was huge. I mean, we were on the brink at one time. I really wasn't sure we were going to make it through. By then, we actually did have like a pretty good cadre of clients. So I must say that I think the lesson learned there. Again, we still grew good in that year with new clients added, but what I learned during that experience, and all these negatives teach you some of the most important things in life, and that is that it's not just about making new clients. It's the key is also there's a balance taking on new clients, but how well are you communicating with and taking care of your existing clients? And sometimes, not just our business, but other businesses, you can kind of take for granted and some of your clients. And so we had to spend a lot of time in 2008 and 9 hand-holding, communicating with, emailing, phone calls, more phone calls, sending out videos, having clients come in on a regular basis, either in groups or one-on-one, to kind of, help them to understand that as bad as this is, we're here fighting alongside of you. The worst thing you can do is hide under your desk and ignore phone calls when people feel like the world is burning up around them. So we learned some valuable lessons there, and that's just, people have lots of choices in who to select to be their financial advisor, and they want someone in the worst of times to be there for them. They want to hear their voice. They want to be reassured. They want to know that they matter to you. So that was a time of we definitely earned our keep, because we were burning the oil morning and night, trying to keep up with all the new clients that were seeking shelter and looking for different answers. So that was good for us. At the same time, making sure that we don't bring in 2 people in the front door and 3 go out the back door because we didn't take good care of our existing clients. So I think some of our most valuable lessons were learned during that time, that it's a lot less expensive. It's a lot less cost to a business in keeping an existing client than it is bringing on a new client. So we've added a lot of resources and different things that we do over the last 10 years or so to make sure that our clients feel valued and that they're constantly communicated with, and that they get that Ritz-Carlton Platinum service that they deserve. So, yeah, you always learn some of your most valuable lessons when it's trial by fire.
I agree with you, and I also firmly believe that tough times just makes you stronger. But coming back to it, like it was 2007 and 8 time, and you were having more clients than ever. How was your risk management in place back then?
Yeah, we actually we kind of set ourselves up as a company. You've got to determine what your identity is going to be and who you're going to be for clients. So thankfully, we decided that, hey, you can't be all things to all people. So what we're going to do is we're going to be more conservative than what a lot of people are. For one thing, many of our clients are 55 plus years old. So they've already accumulated wealth. Now they want to keep it. So we don't just want to make lots of money in the good years. We want to make sure that we have good mitigation strategies so that we're positioned well, so that when a bad year comes and we don't know when it's going to come, we're better positioned than most other people. We want to do well in the good years, but we also want to shine in the bad years. So thankfully, in 2006 and 7, we were actually telling people, we didn't know 2008 was going to be as bad as it got until March of 2009, when it kind of hit bottom. But we just always know that eventually, there's going to be a correction. So we said, hey, here's how we help people with their money. But there are people in a good year that are going to invest your money, and chances are they're going to make more. Like, they might make 20%. We might make only 13 or 14. But when the market goes down 20 and you only lose 7 or 8 and they're losing 20, when it really shakes up, you come out about the same, but your roller coaster isn't near as dramatic as theirs is. And I said, if you're happy to make good returns in the good years so that you're more protected in the down years, that's what Beacon wants to be. And that's been our message ever since. You have to determine as a company, like, who's going to be your avatar client and who are you really going to go after, and what is your marketing message going to be. And by doing that, the more narrower you become, not everyone's going to become your client, but that's okay. You end up with the people that buy into your philosophy. And we just kind of always been known as the ones that, we have a really good plan. We're very comprehensive. but we're not trying to beat everybody else in the good years. And so that's really helped us, and it's helping us again this year too, when things have not gone so well in the stock market.
Yeah, and you know what? That perfectly makes sense to me because I kinda related it to myself and my journey in general. My coach will always say that in every player's life there will be up times and down times, but what is more important is how you deal your mentally and physically when the times are tougher. And those are the times which differentiates between an elite player and an intermediate player. But please go ahead and tell us what are the financial products that you use.
Yeah, so so we have first off, let me tell you that as our company has grown, we are really a full service comprehensive wealth management firm. We don't just invest people's money. It's really expanded since then. So we have like what we call the 5 pillars. An investment arm, which is investment plan. I'll come back to that. Income is another pillar. So we have an income plan. So people need an income plan for retirement when they don't have their income from their work anymore. And then tax planning, healthcare planning, and estate planning. So in our office, we have specialists that work with our clients in all of those 5 key areas: investments, income, taxes, healthcare, and estate. If you've got a good solid plan for all 5 of those things, you're ahead of seriously 95% of the people out there. But going back to investments, the good thing about being independent is we can have access to anything and everything. So in the growth arena, stocks, mutual funds, ETFs, bonds, bond funds, dividend products, bank notes, um, real estate, um, private placements if we wanted to. Um, there's really, you would think that with a bigger company, like a name brand, Merrill Lynch, Morgan Stanley, Raymond James, that they would actually have more investments available to their advisors. But typically they have less. They sell a lot of a narrow amount of things. They don't want to sell a lot of all kinds of things. So we actually have access to more than they do. We also, if it's ever appropriate, we have fixed indexed annuities, or a fixed annuity, which is a lot like a CD at a bank, those kind of things. So essentially, all products. But we tell people you need 3 buckets of money. You, you know, when you're really young, let's say in your 20s and 30s, you essentially need 1 bucket of money. It's all growth because it's way down the road money. But for most of our clients, we need 3 categories of money. Conservative and protection is one, growth and income is the other, and growth only is the third. So you kind of have 3 different buckets. One is the most conservative, and that's really about protecting your money, getting a reasonable rate of return. But in a bad year like this, you're happy to have that money because it's not losing anything or hardly anything. Then you have in the middle, a bucket of money that is more dividend and income focused. So it may only grow 2 or 3%, but it may pay a 5 or 6% dividend. So when you add those two things together, that's good. And when the market goes down, and let's say it loses 3%, but you're getting a 6% dividend, you're actually positive 3% even in a down market. Then you have your longer term growth money. And we mostly at our firm use a lot of ETFs, exchange traded fund, which is broader diversification than a stock, but less cost and less diversified than a mutual fund. And that's what we tend to use with a lot of our clients.
So when you talk about ETFs, is it that you are only investing in ETFs or you are actually also investing in some growth stocks as well?
Oh yeah. So, um, you know, we most of our clients have some individual stocks, growth stocks. I mean, whether it's the Nasdaq technology, Apple, Amazon, those kind of thing, Google, they've done well for the last few years. This year, they're taking a hit. Everything that goes up more than what the market is, eventually, when there's a correction, it's going to correct more than the market corrects. The good news is, for people that were in, let's say, a retirement account where there's no taxable situation to sell something inside, as long as it stays in it, we we've been in NASDAQ technology quite strong for the last few years, and really we excelled. But then this year in February, after a couple of months, we saw that was taking a hit. We reduced our exposure to that and went in more to value, which has really helped our clients because they've escaped. The Dow Jones is only down about 10%. The S&P 500 at the time of this recording is down 18 to 19, so almost 20. So Dow's down 10, S&P's down 20, NASDAQ's down about 30. So if you had the ability to kind of lessen the exposure to NASDAQ early in the year, you got to keep a lot of the gains you got the last few years and have lost less this year. So, we don't do everything right, but as a finance committee for our firm, we decided to do that in February, and it sure has paid off. But yeah, we use individual stocks, and there's certainly a place for that almost with any age, essentially.
So, could you please tell us if you're more deviated towards fundamental analysis or technical analysis, or maybe both?
Yeah, I mean, there's certainly a place for both, and we use some outside agencies as well as our own internal to kind of do analysis for us, and we want to get that analysis unbiased, kind of from various sources. Um, so again, it's nobody gets it right all the time, but we don't think that one particular way is just the only way all the time. So we pay money to certain groups to do certain analysis in a different way on a yearly basis. And then we just, at some point, you just got to go with your gut. I mean, you certainly read what those things are saying, but at some point you have to kind of make a decision. Sometimes you're right, sometimes you're not. Performance absolutely matters in this business, because if you always have poor performance, nobody's going to stay with you all the time. But another thing that we preach at our firm is sometimes people get too caught up in just performance. Performance isn't just what gets you to the finish line. A plan is what gets you to the finish line. A coach can have the best players in the world on the field, but that doesn't mean they're going to win. It's how that coach utilizes those teammates and players is in the scheme and the plan of what they do with those is what is going to help that team to win. And we look at it the same way in the financial business. Nobody that is our client has amassed the wealth that they have just by getting it right on two or three things and outperforming everybody else, and now they're just multi-millionaire. It's how their overall plan, the scheme and the strategy and the moves that were made, and not all of them was right. Any team that wins doesn't make all the right moves throughout the game, but so what we find is that people have products, they have funds, and they're aiming for performance, and that'll let you down most of the time unless you really have a good plan. So we preach a lot on just your overall financial plan.
Thanks for listening to today's episode. Please remember to like and subscribe to the Insane Minds podcast.